All right, take two. Got a few minutes into this one and then accidentally hit stop record, so I thought instead of trying to piece it together, start fresh. So here we go. It's where are we at? 10:20 on the 26th of January. So 10:20, and that's 10:20 in the morning this time. So not the sort of typical sort of 10:30, 11:30 at night where I sort of normally punch these things in, trying to get it done a little bit earlier in the day. We've got Australia Day happening today, so get this out of the way and then move on with some sort of celebrations out and about off the screens. But for now, gives us a chance to do a little bit of the weekend wrap where we can sort of see how things sort of finished up over the week. See if we can pick out some themes, some trades for the sort of upcoming week, and sort of really sort of try and get a bit of a picture of sort of what's happening with a market and where the flows are going at the moment. Because look, we saw DXY start to come off at the moment. We've seen gold, as you see on the screen here on the 4 hour, coming up and really sort of testing that all-time high area over there. We got breakouts on a lot of the US dollar crosses and that, Aussie particular, because obviously that's what I trade. And we're seeing China also come down towards its price target. Well, my price target, first price target, and then coming into a sort of pretty important zone there, and a couple of headlines and that to sort of cover up as well. So it's been a pretty hectic week. It's been a very hectic week actually, because a lot of the talk was the tariffs. We've seen sort of obviously the mention of Mexico and Canada, 25% tariffs, and that potentially come 1st of February. We also saw the mention of 10% of tariffs against China, and then a bigger headline towards the end of the week saying that Trump doesn't want to use the tariffs, which is obviously very counter to what he was saying prior to being elected, and what I've been sort of saying and why I've been basing my trades the way I have this week, on the idea that, he had this great chat with, I love, personally, some people sort of pick on it and they hate the way Trump talks. I love the way he talks about it. He's like, yeah, we had a great chat. We did a good chat. I'm not going to do an impersonation, but the idea is there. We did a great chat. Had a great chat. Very, very prosperous. And he gets off the phone. He puts out these headlines saying, look, we've had a great chat. We've sort of come to agreement. We've discussed all these topics. We're going to work together in that. I've been saying for weeks that China are not in the same position. They're not the same threat that they were in 2016. It just doesn't make sense that you'd have this great chat, they're not a threat, and then boom, you come out guns blazing and blow them out of the water. For what gain? Everything's got to be calculated. And the thing is, they've got to be able to sort of gain something from it. It's like, if they're not a threat, what's the point of sort of kicking them while they're down? You know, it ruins relationships, it sort of creates an unstable environment. It's not conducive to sort of to economies prospering and doing better. So that's starting to sort of play out a little bit at the moment, and we're seeing that in the strengthening of the yuan, a little bit of a pushback of the Aussie, and that aside for that, that's more that direction. But obviously, as I said, we've seen DXY sort of break a little bit this week, gold coming to the highs, silver underperforming. So I'll cover all these sort of ones at the moment, but look, let's sort of start off with gold, because gold really, since the start of the year, has just been on this rip. Excuse me, where are we at? So start of the year, just around this point over here. So this is Jan 1st over here. So put in a tiny little bottom wick here, as it does for these sort of little things, down to 26.14, and now we're up testing all-time highs. So that's a $170 move. Which is 6.5% in, what's that, 3 weeks? That's a big kickstart to the year. So obviously sort of like very much coming up in this top zone here. So this keyboard's packing in a little bit. So look, this is on the 4 hour. Let's zoom in a little bit and see what we can see. So we had the break of this sort of triangle. If you watch what I've been doing in that, or what I've been saying, so like obviously we had these drastic sell downs, potential double tops, all this kind of stuff. A lot of people and quite prominent names in that have been calling sort of breakdowns, and certainly at this point when it was inside this triangle, like this was the plan to sort of break out this way. If it broke out this way, this was your target down here. This is your target on the upside, like more or less a bit of a range through there. But yeah, I've been hearing 22s, 2300s, these kind of things. I haven't been in that camp. I've been in sort of Team 3000 camp. Um, that's my own sort of thing anyway. Maybe it's just me in the camp. It's certainly not just me in the camp thinking it's going to 3000, but maybe with the name. But however, this whole period here is more or less obviously just consolidation. You had double tops over here, giving sort of fake top signals. You had a lower low afterwards, which obviously sort of trapped in a few people. Then it's just ripped all the way up through here. But these kind of periods, very similar to going back to these periods over here. There was a point through here. Obviously, I sort of wiped all my charts the other week. But if we look at these sort of periods through here, these are very similar sort of periods in which they're just, whoop, what's going on here? There we go. The keyboard's working. Very sort of sort of periods where okay, there's a range through here. You got a little sort of fake top out here, sell down afters. These little up down periods in that. Sort of what I've said a number of times in that, same with this period through here. These things are done by design, in my opinion. I mean, if you're just trading and you're like, this is why it makes it very hard for some people because like, there's your low. Okay, here's your low. We've closed out the bottom of it. Well, the textbook says, it should be going down lower. We got three lower highs. We got lower lows. That's change of trend. Boom, boom, boom. And what does it do? Runs up sort of, a couple of hundred, $700-800 and that from the lows down there. So, I mean, everybody knows what gold did last year. It's like 20-30% or something, which is just insane. Monster sort of moves and that with it all. But this period through here is, in my opinion, just it's done by design. Clear the book. I said the same thing when we went through these periods here. Like you've got bulls, if you're sort of trading this thing and you're sort of weathering 150, 200, well, I think it was $150 swings through these areas. Yeah, 157 buck swings through this area. Wow, you're really committed to the cause. But the point is an exchange. They sort of wipe some people out, they add some on, wipe some people out, get reset and on with the show. This is more or less what we've been seeing through this period here as well. So you don't need to reinvent the wheel every time you're looking at these charts. You just need to look and understand how certain markets are going to react and play out. Excuse me. Um, and then you can try and apply that logic to the current day. Obviously, these sort of periods here, look, to be fully honest, through this period here, I was holding some gold and I got chopped up through here. Then I caught it up through here, then it got chopped up through here. So, if you sort of traded long and short through this period, amazing. You know what? There's certainly some massive swings in that, very fast as well, which very much suit my style of trading, if you actually sort of enact it. But the point is, there's some great money to be made in this area because we're not just seeing endless sideways chop of up and down, up and down. This is like $150 bounce back up. Also, I think it was on $200 bounce back up here. We had, what's this, like 250 or something. 250, yeah, 250 bounce. And this is the thing. I can call these numbers about how far these things are because this is the market that I trade. I know how these things have moved. You know what I mean? When you look at only just a certain amount of markets, you get to know the nuances in that, and you get to sort of understand how they move and sort of like their intricacies. English, apparently my first language. Anyway, point is that look, at the moment it feels like a large consolidation with breakout. We're testing all-time highs. If we push through this area here, obviously that's a new all-time high and on with the show. Now, the other side of this is the fact that technically at the moment hasn't made an all-time high. So we could potentially be seeing a larger sort of range like this here. We saw it sell off a little bit just into the end of the week. As I say every time on these weekend videos and that we kind of disregard the last candle, definitely. But even the candle before in that, think about if you look at this on a daily, this thing's been ripping up. There's a lot of profit on the table, even just through this move here. So you're coming into the end of the week. We're coming up here. Didn't even quite get the body fill there. People are going to be taking profit. I mean, I closed my gold positions. I think about 80, 81, 82. So got to 85, 86 or so. People are going to be taking profit going into the weekend. Things feel a little bit more stable at the moment. We're seeing a little bit of the sort of Gaza stuff some hostages and all that kind of stuff come out. But I mean, look, end of the day, the market, I don't believe, has really cared about that for quite some time. Um, but it's natural to see a little bit of a sell down. And as well, look, if you look at it on a weekly, that's a big, strong, solid weekly candle. We're looking at 47 to 69. That's a big high close in terms of a weekly candle. So that's closing nearly at 1% higher than a weekly has ever closed before. So realistically, if you look at this on a weekly, this looks like it wants to go. RSI is absolutely primed for this move. As you can see through this period here that I was showing a second ago, RSI came back down, was overbought as it came into this area. A little bit of a negative divergence weekly wise. As you can see, RSI is moving down, put in a new high, that got rejected. Allowed the RSI to come right back to the lows here. This is where we're at the moment. If this thing goes, we could be seeing a very big move. I mean, you got to sort of think, okay, where would these move? Say this was your little measure move through here. Look, you've got to sort of wait for these things to play out a little bit to sort of see what's actually going here. And this isn't a true range because obviously, as we can see, it only touched down here once. So I wouldn't necessarily go off this as a measured move, but there's your 3,000, give or take a couple of bucks, if you were to say, okay, that's the measured move through there. But, excuse me, this is the same sort of thing. So I remember sort of doing this on the slower scale. Like, if you're trying to sort of pick out the price action of what's happening here, buyers are down here, sold down, sold down. Buyers aren't waiting down here again. They've moved up their bid. So now they held a new support through here. They've pushed up here. They've taken out the sellers. We saw the absence of sellers at this level. And this is a big important thing when you're going through these levels. You want to see not only does it just touch in here, because remember, we knew sellers were here based on obviously price action coming down here. Market came back up here. Well, sellers were waiting there and they absolutely crunched that down. Because remember, this would have been a big blue candle at one stage as well. And then, poof, smashed down. So buyers have sort of like gone, okay, great, another chance to buy down here, move up over here. So should this move out and sort of put in a new high, RSI is absolutely primed to support the move to go higher. Now, if we go on to lower time frame, well, say lower, but say the daily time frame here. I'll pull this down. I'll call this a little bit of the triangle here because this is more where these two intersect. And so this is your breakout. So let's bring this down just a little bit. That's your price target there, 29.20. Based on the idea that this is obviously just a consolidation period here, you got the triangle. You could say, look, okay, it technically started from here, coming down to here, but I'd like to have at least two touches on the lines. And obviously this being the bottom line, this being the top line, this doesn't exist out here. This one does exist in here because it's inside the actual structure. So to me, that's the structure there. Anyway, that's maybe a more conservative thing, but conservative is fine because it means that you actually, you get your target and you get your hit. So look, we're a little bit overbought on the daily. So, but we are still sort of trending up through this. I would say that we could get a little bit of a push out. I wouldn't be surprised to see, obviously, a little bit of a follow through this week. We're seeing US dollar sell off. That flow is coming into different markets. We're seeing a few things break out. And this is the big thing that I've been saying about Aussies, about gold and DXY. 90% of the time, I believe it to be sort of running pretty much inverse. Gold up, US dollar down, vice versa. More recently, last couple of months, I covered it the other day that they've been running a little bit more sort of concurrently. So both been selling off at the same time. Gold has more or less been holding its own, opposed to selling down. Yes, we had these strong sell down periods down here, but if you look at what DXY has done, this is where I stuffed the video 2 seconds ago. Put this one on here. Make this a little bit more. So say more, actually let's wipe this off. So pink line being DXY, gold being obviously the candle through here. They're both moving up through this period here, both sort of sideways. This is the inverse. section of it all, rolling over, rolling up, where they kind of meet. That's irrelevant as to where they cross over with it all, I suppose. But the idea is that this is the typical sort of inverse relationship that they've got. Gold rolling over, US dollar rolling over here, gold rolling up. Then through this period here, around September last year, we saw a shift of it all. And as you can see, more or less, US dollar has just, well, not more or less, US dollar has been on a rip, but more or less, they've been running together. Gold's moving up, US dollar's moving up. Gold sells down a bit, US dollar moves up. So this is where they're back into their normal sort of relationship, where gold's moving down, US dollar moving up. But US dollar kept moving up. Gold didn't keep moving down. And I think that's important to note there, because what it means basically, in my opinion, is that, although sort of the market is obviously in its normal sort of, okay, let's sell gold, buy US dollar, because US dollar is on this big rip moving up through here, there's still segments of the market that are holding gold elevated. If you see this big move up here, we didn't see gold come all the way back down over here. And maybe this is partly the reason, as I said, some of these bigger names are sort of saying, oh, look, it's going to be doing this. But this is why it's important to, really sort of understand the markets that you are trading, because gold's been held up near the highs through this large rip of US dollar. So the buyers are still sitting here. They're still holding this up higher, even though the flows are coming into US dollar from other parts. So what happens when they start to go, and as you can see, US dollar is rolling over a little bit here now, gold starts to move up. You've got the segment of the market that's already buying this, despite the US dollar being the option. What about all the people that have made the profit off the US dollar here now? Where are they going to put their flows? Yes, it's going to go back into some of the crosses. We're going to have seen Euro, Aussie, a few of these other names and that sort of break out. But, gold is, as I said, typically an inverse relationship, more often than not, with US dollar. The flows are going to come out of US dollar, and they're already buying gold. So now the people that sort of were in US dollar, they're going to start buying gold. You got that with the people that have already been buying gold through this whole period. And they said, look, you know what, we're not going to go full into US dollar. We don't care. Gold's going to 3,000 plus. So we're going to keep buying gold, because when this tips over, all that part of the market's going to jump into gold. They're going to be paying this price. They're paying 2,700. They're not paying 2,500, 2,600, these kind of levels. So you've got two sets of the market, both buying gold now. What do you think is going to happen to the gold price? It's going to go through the roof. And this is what we're kind of starting to see now. We're starting to see sort of US dollars start to sell off. Gold's on an absolute rip right up to sort of test the highs. And I could see this probably sort of continuing. Technically at the moment, let's go back to what we're actually looking at. Technically at the moment, we're obviously not at full breakout. As I said before, it could be a potential sort of range through here, should they start to sort of sell it off down over here. But as I said a moment ago, I think sort of like with DXY selling off, with gold and the weekly RSI tipping right up, I think this is primed for a breakout, and we could be seeing this move a lot higher. As I said, on a break of this zone through here, I'd probably be more happy to be going for 2,900. Technically, if you wanted to go through this full breakout back period here, you could sort of say and sort of see that this could potentially be sort of going up around 3,000. But I think sort of certainly buying up to 2,900 before some sort of potential sort of deeper sort of pullback like this could be the plan that we do. So with these sort of directions, because I've got a mate that sort of trades it, he's sort of like, oh, I buy the 4 hour and I sort of do this. I'm in and out, as I sort of repeat constantly, like a bandit, mate. I'll pick these price targets and I'll buy dips, I'll sell rips through this period. So for instance, through this whole move here, I don't know how many actual trades I do, because I go in segments and I take profits in segments as well. But I'll buy, sell, buy, sell, buy. Well, no, sorry, but like buy profit, buy profit, buy profit, buy profit through these periods here. Till we get up to a price target, then I'll wait to see what the market does around that point. And then potentially, if we start to see some lower time frame sort of technicals, maybe try and capture part of this move down here till we get back to an area where we could expect buyers to, as a larger scale, to step back in. So I'm not a buy and hold kind of person. So just to differentiate that. Anyway, so look, daily is a little bit hot on it all. So smaller scale of this kind of thing, we could potentially see breakout, retest, and a move up like that. And that's probably what I'll kind of be looking to do. But I do believe we've probably got a new all-time high coming. All right, so let's actually, I'll jump down quickly, just have a look at what we can look for. I mean, look, it's pretty straightforward. We came right up within a hair's whisker. So it was 88. What's the all-time high? 88. Yep. We hit 86, 85, 86. Yeah. Take out the highs there. Expect some stops around this area and a little bit explosion back up over here. I always expect this kind of move when you see these big stops hit. If anyone was trading, they remember this period here, which was absolutely insane. It jumped like 75. It was a Monday morning as well when this happened. See, Monday morning. And this was going back, what's that, December 23? I don't remember it so long ago. But yeah, this ran the sort of $60 in like 15 minutes. It was insane. It was up, 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 up. I was up here, short, 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 kind of thing from the top up here. I'd never seen the spreads go so big on gold. But I always expect those kind of moves with these breakouts. But yeah, I'm always disappointed with them. Gold is the kind of thing, oh, it's broken out. And chug, 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 chug. So yeah, we'll have to sort of wait to see how it goes. But as I said, as a whole, I do believe that we've probably got a new all-time high coming here. All right, on to DXY. Because as we've seen this one, look, this is pretty much traded perfectly. Look, so if you've been watching, I've been trading through this wedge coming up here. If we put it on the daily, you can see the negative divergence that we were sort of calling a couple of weeks ago. Negative divergence into a wedge, broke through, quick first retest. Let's get back onto that 4 hour. So quick retest, straight off the bounce, double reject, came down here. We expected buyers to be here. So, you know what I mean? Like the way that these things will work structurally, you'll have your breakdown, like this path that I put in. Admittedly, I was a little bit early. What was I? From 11th, 3 days early. Not too bad. But exactly, it sort of went off the top and that and then crunched down afterwards. But the point still remains that, this section here, move down. You're going to see a reaction at these levels. And this is the point with these sort of things. You're not trying to sort of pick, well, at least for me, I'm not trying to sort of pick, okay, this is a buy to sort of be the generational low or the generational high, or it's going to change your life with one trade. No, you're trying to sort of pick out where the buyers have been, where they're most likely to sort of have a shot again, and how that price action is going to react around it. And these little arrows and the circles here, they sort of show this, because this is an area where we thought buyers were going to be. And what happened? It hit the zone and rejected and came up here. Now, whether this is buyers giving it another shot or shorts closing sort of things, which in turn is obviously when a short covers, they're buying the position back, it pushed back up here. This was the test that I said, I can't remember what day was it. I don't know. I think it was maybe around, Wednesday last week. This is the area that we wanted to see what would happen. And why? Because we can see previously that the sellers like to hold this area. As they pushed up, it became a little bit of a sort of support. You could see here, they used it as a little bit of support as well, which was in confluence with this rising support. We wanted to see, are the sellers back in at this level? And they were. Came up here, pretty much kissed it. We're talking 51, like sort of 3 points, 3 points or so. And it went crunch down here. So this is the path that we were looking for. Push down here, buys to give it a shot, test up here, lower low. And this is what we're seeing. And we're into a little bit of clear air through here. Again, disregard the last hour or so of the week. This is a little bit of retest area through here. But if you're buying US dollar, you got to be pretty game at this point, because you can see clearly you're breaking key levels. Doesn't mean it can't have other little flare-ups to sort of move back up through this area. I mean, you can start to draw up some of these lines potentially now as well and say, okay, what angle are they selling it down on? Where may they sort of sell it and say, okay, that's a little bit of a channel or something along here. So we could see little pushes up, a little attempt up here, and then sort of move down. But I do believe this breaking of this key level, breaking of this structure needs to be honoured with a back test, a couple of back tests actually through here. So it means we target the next level where we think the buyers are, which is obviously this level down here. Price target, buyers, whatever, crosses over. That's level down here. And then same as we saw here, the market to give it a little bit of an effort, as it has previously, so down here, give it an effort and see what happens once it hits this zone over here. But the point is that we've broken the key levels, we're heading it down a little bit lower. We've got a measure move price target, which actually technically takes you down to, actually this would be this level here, which is getting closer to our price target as well. This is another reason why we think this may sort of come down to this area over here, and then see what the market does at that point. You know, you could sort of see this as being potentially, and this is obviously early days, but it's a different color. A larger head and shoulders. I mean, this is very early days. Whoops. Something to this effect. Where you've got a neckline, which would be well defined, shoulder, head, shoulder, comes back through here. Because we're going to see, as I said, if we get down to this zone over here, we are going to see a reaction. It won't necessarily come up as high as this. This is just, as I said, potential play out of it all. But this could be a big sort of reversal playing through here. And we could be seeing this give way back down to a previous zone that we have got marked out over here at 101. Now, this is very much sort of, wow. I mean, it's, there's a lot that needs to happen for this to happen. But as a structural sense, this could be something that does work. So, point being, how we can utilize this is the fact that we're breaking these key levels now. We could sell rips in the US dollar till we get down to this period through here. Then we could expect a couple of weeks or so of sustained buying of US dollar up, and then we sort of wait to what happens around this potential right shoulder over here. If that starts to sell off down here, then we start to have a bit of a head and shoulders moving on, and we look for a bigger move. This is kind of like probably a 6-month play. This is not sort of something that's happening obviously this week or anything like this, but this could very easily be sort of taking you through to say, even through to this period here, say, next couple of months for this section here to play out. And then, so if you break this level through here, then you'd be looking down at 101. But again, at the moment, we're only in this section over here. So, but the point is, through this period down here, I'd be selling rips. Through this period here, I'd probably be looking for sort of like a little bit more of a sort of medium term US dollar buying spree. And then if we see a rejection through this play down here, you'd be selling rips right through till, I mean, who knows? As I said, these are price levels, not time levels. But say it goes through till, say, mid-year kind of thing, back down at 101. And you can see quite a substantial sort of pullback. DXY is not afraid of deep pullbacks as well. So to really sort of screw the market a little bit down to 101. Anyway, look, that's broader picture with it all, but that's the whole point of these sort of weekend wraps. It's like, yes, look at what's been happening, plan out for sort of like, next, not just this coming week, but like, potential themes that could be sort of playing out over the next couple of months and get a broader, higher time frame look at things. So then when we are trading them on the lower time frames through the week, we know, are we selling rips or are we buying dips, whichever. So break through this level over here, a little bit oversold. Look, we'll see what happens. I think we've got a bit of news actually. Just on that note, we'll sort of have a look at what news we got coming out this week. Because I think we've got a couple of central banks meeting. We had BOJ, of course, on Friday, which is another reason to sort of add down to a little bit of that sell down on DXY. So we got more PMIs, China. We've got Aussie CPI out this week with a slight tick up. Again, higher CPI, sticky, adds to the idea that, we're going to be seeing a little bit of sustained strength through this move with Aussie. We've got the technicals. This would give us the fundamentals, which means, as I said, I'll get to Aussie in a moment. We could be looking up around that sort of 64 sort of price target. Consumer confidence. So we got BOC. We've got FOMC. So FOMC as well. So this is obviously going to be a big one here. Look, the hold, that's pretty much standard, I think, at the moment. I think that's pretty much priced in for it all. So you'll be looking for the press conference after that as to sort of, are they sort of still talking potential dovish, or are they sort of going to take a little bit more of a hawkish stance in that? So, we've got most of the data out there, and it's, look, still all in all kind of strong, but there are some little cracks forming with the fundamentals, which could lead them to sound a little bit more hawkish, sound a little bit more dovish, which could, sorry, I got all that back and forth on that. Waiting to see, are they still sort of having a bit of a hawkish stance? A couple of cracks could lead it to sounding a little bit more dovish, which obviously would add to the US dollar sort of DXY sort of sell down. So we've got ECB going. So it's a big week. We got, as I said, we got a lot of the central banks meeting this week. So it's going to be quite a sort of hectic sort of week moving through there. A couple more CPI for PCE to end the week off. So FOMC, ECB, they're the kind of big ones that we'll sort of get to. Anyway, back on DXY. So look, with those sort of things coming up and that, I think the market's going to be, as typically sort of, oh, it's waiting for this, or this has just happened. We could see a little bit of a slower sort of start to the week. I don't think we're going to get a straight meltdown with it all, but should we sort of start to reject around this area, even if we push up, we sort of look at a lower sort of time frame move here, and say this is the area that we'd be looking at here. This is the zone. Any move up to 107.74, I'll be looking to sort of sell that rip into this kind of move. Short term, I would imagine some support coming in around this area. Again, we've seen that the market was trying to hold it here, trying to hold it here, trying to hold it here. They became buyers, they became buyers. So most likely they're going to give it another shot at buying it here. And we could see a little bit of a rally off this point over here. But more or less, I'm still targeting 105.6, 105.6 and change, that kind of thing through that area down there. So if we see an early move up in US dollar, I think it's just going to be a little bit of an early week top wick, little fake out, and then I'd expect that to reverse sort of down through the session. And sort of, as I said, first target 106.80, and then moving down to 105.60 and change, sort of maybe throughout the week, depending how those central banks sort of play out. All right, so tick along. We're 33 minutes. I've only done two of the markets, so let's fire through this. We've got Aussie, which is obviously one of the favorite markets here. Wow, favorite when it's working. It's been an absolute crush for ages. So everybody knows channel, bang, we've been in it for 3 months, and that early indications of breaks of channels are exactly as we saw down here. Look, I've covered this thing. We had the negative divergence. It's a little wedge through this period here. We did actually have a negative divergence here as well. There we go. So it's just on the daily, as you can see, this last dip down here was met with a sort of high buying pressure, and that negative divergences, higher time frame. So if you want to see, particularly after a 3-month sell down like this in a channel, you want to see it at minimum on a daily to be able to hold this, because we did have slight little negative divergences around these areas over here, but obviously just boom, sustained, sold through. US dollar selling off more broadly, CPI looking to tick up a little bit. The conversation around the RBA is back on the idea that we're going to be holding in February, so coming up pretty soon. That based on the idea, and this is what I've been saying for a while, is that one of the prerequisites that Bullock was saying that she wanted to see was quarter-on-quarter data in the range. We have, for 2 times, and we haven't had that once. And they keep whinging about the home loans are too high and all this kind of stuff. But I'm sorry, I have zero sympathy. The housing market is absolutely screwed. You want to buy a place, you're buying an apartment for 600,000 or 700,000. Why? Because people don't understand that when you borrow money, you don't need to borrow the most money that the bank will lend you. Just because they'll lend you $1 million doesn't mean you have to borrow $1 million. but people did this, and then they're like, but what? I got to pay it back. Well, this is, I say this, in the nicest possible way, but like, there's trades that you take. I took some longs through here. I got blown apart. That's a trade I took and I got it wrong. I paid the price, that's fine. These people have bought houses, unable to pay them back or feeling the pinch through it all, but now they want everybody else to pick up their bill. They want the rest of the country to cover the fact that they borrowed too much, destroyed the house marking prices. Look, I mean, look, housing across the world is stuffed, but particularly in local markets here, Melbourne, in Australia, they're just ridiculous. So you know what I mean? You can't just pander to these people because they got something, they made a bum call. It's like me sort of saying, oh, but I bought Aussie through here. Can I just take that trade back? No, you can't. You got to pay the price because you made a bum call and you didn't think these things out. So what the RBA is looking for is the quarterly, quarter on quarter inflation figures to be within target 2 times over. We haven't had one of those yet. We've got unemployment at sort of pretty significant lows. We've got employment, which isn't just a direct inverse as well. You got to remember because employment and unemployment, you don't count towards that if you haven't looked for a job for 4 weeks or something like this. So they're not true numbers of the thing, but it's the standard that they use to record the numbers. So that's what you go off. But the point is that you've got record numbers of employment. You've got unemployment lower, even if they are part-time jobs. It's still a lot of jobs that are being added each month, like 60,000 or something like this, while the prediction was around 20,000 or 24,000 or something. These aren't the numbers that you want to see, particularly with inflation at a high, not into target, to go, okay, yeah, let's cut now. Because you play these things out. What happens if they cut now? People go, oh, wow, it's all over and that, and the rates are coming down. Let's borrow more money. I think the market as a general, general Joe Six-pack segment of the market has proven that they can't responsibly borrow money and they blow the markets apart. While people are sort of working a lot, there's a lot of cash flow going around there. What's going to happen to inflation? People are going to borrow more money in circulation, costs go up, inflation goes up. That is what inflation is. So I don't know. Given all that, I don't believe we're going to be getting a rate cut in February. I still think I mean, I'm not stupid. It will come, but I think maybe around sort of February. Around May is the sort of expected time. Which how we can use that is the fundamental to go along with the technical to say that yes, okay, this move may be sustained, and we may actually see a little bit more upside through here with Aussie. Because what you want to try and do is obviously, yes, look, we got this channel, we got the breakout, we got the back test, we got the higher high. Technical, gone past the swing. So technical, you've got everything saying, yep, look, this wants to go a little bit higher. A little bit overbought here. This is on the daily. We could see a little bit of stuffing around. As I said a second ago, you got DXY on its way down kind of thing. I know Aussie's not part of DXY, but it's US dollar buying as a broad sort of sense. If this thing's a little bit overbought, that's fine. It can stay overbought for a period. As you can see, it stays oversold for a period here as well. I think we do have upside here. I think the measured move price target takes you to 64.13. You've got a resistance here at 63.77. So this would be your first little target here, I would say, because obviously, the market held it, tried to hold it as a little bounce back up here, but they sold it down through this period here. So I think realistically, we could look at sort of 33.70s. So another 60 points, another 1% or so from where we are now, to at least target. But then you really look for that measured move up until this zone over here, which obviously this was a lot more of a significant area where they gave it up, and bang, went down. And obviously this last little wick through here was the last little sayonara move before getting absolutely smashed just before Christmas. So I think this is more realistically the target that you want to go through here, but take profit as you come into this zone here. because as you can see, although this is bigger through here, there was a little exchange of price through here. They tried to hold it, tried to hold it, tried to hold it, push right back up, and then no, they said no. So okay, we're not holding. Sell, 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 smash. So yeah, I think 63.74, 63.70 to be on the safe side. That's your first sort of little price target here. So let's put a little TP here. Even if it's partials. Through this zone here, but realistically looking at main price target here. 64, which is a decent little bounce, but again, if you look at this thing in context, this is also just at the 38%, or not even, it's actually technically just underneath it. But this big support, and which subsequently became resistance, that is also the 38%, which in respect could still see a move like this, which I covered the other week. Could move up here, and we could see down here. This is the important leg here. And if we look at things in terms of sort of like, say, this is again a bit of the forward thinking with it all, as a cross chart confluence. If we put DXY on this other chart over here, and say, let's get this onto. And again, remember, I'm just sort of saying US dollar as a US dollar as a broad, or DXY as a broad US dollar buying selling. I could see this price target here being hit the same time that this price target's being here. They're both within striking distance. What happens when you hit this area here? You're going to see a reaction. You're going to see people sell back down. What's going to happen here? We're going to see US dollar as a broad sense probably catch a bit of a bid. So as they buy this back up off the support, which are most likely, very highly likely, I reckon we're going to be seeing this move happen. They start to push this up here. They'll start to sort of buy US dollar against the Aussie as well. Yeah, Aussie's not immune to it, even though it's not technically part of what makes up the DXY. It's not immune to what the market does with US dollar. So it'll start to push it back down here. So this is the area where we can start to see things play out. And this is how you could get potentially Aussie ripping. Because if we see this push back down here, and this head and shoulders plays out here, this section through here, you see US dollar buying in a medium term. They buy it against the Aussie, which pushes the Aussie back down over here. If US dollar then rejects from this area and this head and shoulders potentially plays out, Aussie, because it's not part of the DXY, and certainly it's not like the euro where it's pretty much a 1-to-1, you could see Aussie put in a higher low. If it puts in a higher low, it could then move like this. This is what could then potentially see a head and shoulders play out on here. And this large leg, which would be from this shoulder here, back down to neckline, line down to measured move, could potentially get Aussie right back up over these levels over here. Again, this is forward thinking, but if these things are to play out in tow, if this head and shoulders is to play out, this is how I'll be playing Aussie. This is what I'll be expecting the corresponding chart to be on Aussie. And this is the thing that I sort of talk about. This is the cross chart confluence, where it's not just, okay, I've got a confluence of, on this one particular chart, this is coming into resistance at the 38%. Well, this will be coming into resistance. This will be coming into, its support at around the 50% and moving back up. So you get these things corresponding at the same time. Anyway, whatever. That's a broader picture with Aussie. But the here and now, I think we've got a little bit more upside to go. As I said, those little price targets around sort of 30, I keep saying 30, man, I swear it's that dyslexia, 63, 74, 63, 70 and change, and then 64, 20. If we do get up around this area here, I'll be closing all positions because I do believe we'll be getting some sort of leg like this happening, where we'll be able to add to potential longs should the right charts and the right fundamentals sort of add up. So Aussie CPI this week, as I showed a second ago, is looking to be a little sticky and actually tick up a little bit. Most likely, we're going to be seeing that sort of bolster Aussie a little bit there. Again, Aussie will be the tail end of what happens with the US dollar. But if we see US dollar continue to sell off with a little bit more of the sort of hawkish data, so stronger CPI on Aussie, that's where that'll see that play sort of probably play out a little bit further. All right, we got copper. Copper. So it got its breakout. Backtest down the bottom here. Tried to go through here again. Actually, I didn't see how this closed up on that, but it closed on a little bit of a sort of bearish note through here. But as I said, look, if we look previously at what happened last time, we got this big breakout. You got breakout, backtest, backtest. Unfortunately, this went for 3 months, 100 days through this kind of period here. So I'm not in any sort of super rush, and I said I think around April here, which, as we see, starts to sort of correspond with potentially should that US dollar DXY play out, that gave us around April as well. So I would expect more or less a little bit of up and down chop with copper through here. I think it's quite clear that we've sort of seen here where we sort of marked it out. This is where the sellers are. It's just a matter of sort of like how much they want to try and hold it. I caught a little bit of a bouncer in this area as I was holding the 38% retracement, but yeah, I closed my positions here for now because I don't believe it's a buy and hold at this sort of stage, even though buy and hold's obviously not my sort of style. I'm still a little bit sort of cautious, but look, you can see that obviously this was a bit of a sort of resistance area. It got up above, retested, boom, and the second retest. These are the things as well, sort of like when you get these breakout, and this is why I sort of like I chop and change, I go in and out on things as well, because it's all very well to sort of say, okay, you break, you retest, and then on you go. It doesn't work like that. It's realistically, it's like break, retest, break again, retest, 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 break, shake out kind of thing. So, unless you're sort of like, got an absolute rocket fire entry down here and you're willing to sort of just ride these sort of periods and potentially risk all your profit that you've got on the table, you got to get wiped out. Because if you bought the breakout here, well, you probably got stopped out here. If you didn't get stopped out here, you got stopped out here. And this is given if you don't sort of actually sort of like do the sort of, if you don't sort of trail your stop up with it, even if you just put stopped, I bought the breakout. Yep, that's cool. Great entry. Boom. I survived the first back test. Here's the second back test. Well, it took out everybody that just bought the break. Like, the technical sort of level of where people would put their stops. I'll protect my position, and bang, well done. Now you got nothing. So this is why I go in and out with a lot of these sort of parts and that. But I think certainly once we get a little bit more of a clear-cut sort of idea about what's happening with China, and we see sort of a bit more of recovery on that sort of more local front, which, look, the headlines actually don't look too bad with China, in my opinion. I mean, you do see, admittedly, yes, you get a barrage of ones saying that China's absolutely terrible. But, if you look at what they're doing, they're still building up massive cities. They're still innovating. I mean, it's not like they're the second largest economy in the world. They're not sort of exactly sort of just falling back to, early 2000s China. They're still doing amazing things. And, yes, they've got a couple of cracks, but I think them, and this is why I didn't believe that they were the threat to US. I think they're very humbled from last time. Whether they're like, whether that's I don't know if they're technically actually very humble, but they're putting on the front of the humble because they know that they'll get their teeth kicked in if they go hard against the US. They were absolutely rocketing in 2016. They were on the end of like a decade plus growth cycle. I covered this the other week, but they were on this sort of trajectory like this, moving here. Now they're sort of doing this. They're coming into it on this sort of angle. Well, that's not the time. If you're already slightly tipping over, that's not the time you start a bit more of a trade war because then you go and you absolutely get crushed. The best thing you can do through that period of drawdown, so to speak, of what they're doing right now is just to maintain, hold sideways, work with the US, and then look to sort of start to sort of move back up at a more sort of sustainable growth rate. So I do believe, look, I don't think China's really sort of as cooked as you read everywhere. They've certainly got a lot of work to do. They've certainly got some rot at the core, so to speak. But I think I'm not sort of completely sold on the fact that they're about to just get fall apart. And, you know, them being a large manufacturer, if they're doing a little bit better, we see the US obviously sort of, you know, as a whole, not do too badly. You know, these kind of things are going to help copper prices because obviously, you know, if the world's sort of moving forward, manufacturing's building up, doing all these kind of bits and pieces, you know, we could see demand go back up. And as the demand goes back up, well, obviously the prices will sort of follow with it all because you can charge more for it because more people want it. That's pretty simple. Supply and demand there. So look, that's again broader picture with the copper. Look, in the short term, this wick low under the 50, so 425, you'd want to see it hold that. You break back underneath this, so you've got two attempts outside with a higher low, sorry, lower high, and then yes, you'd probably be looking lower levels. I'd be looking around this sort of 415 potentially. We said that could be a little bit of a head and shoulders. I think this negates that a little bit, so I'm going to get rid of that one. I didn't like it at the time, but I think that, look, this is not a nice candle to finish on. So look for maybe some early pushback down here. If we see US dollar buying early in the week, potentially another test down here. If it holds this zone here, then I would be looking for a larger sort of range play. But realistically, look, this is the kind of area that I'm looking around. I think they're the two wicks that you really want to see break. But for now, I've got like the breakout box. I think this is really what we can just expect. More up and down here, maybe a little fake out down here, fake out up here. I don't think we're going to get any sort of sustained breakouts at this stage. But if we get back down to say 415, I'll probably be looking to buy it. Buys off the support down here. I think that's a much lower risk kind of thing to get a retest of this level. We never really got that retest of this breakout down here. And it's ripped up, that's fine. Deep pullback, doesn't mind. It doesn't mind a deep pullback as well. As you can see, these sort of moves here, boom, straight back down. So look, if it gets back down to 415, which is a bit of a drop off, a couple of 2,000 points or so now, I'd have a look to have a little buy down here. But for now, yeah, it's not really sort of screaming at me. Maybe if you get a close above 438, that'll be your signal up to 447. So this is what I'll do is I'll put a little alert here. Yeah, so closing the zone would target most recent high. So basically, as we sort of say with these things, with ranges, you generally have a midway point, which we can see is fairly well defined over here. You know, given that sort of range that we were sort of trading back in prior to the election. So a close up here, you're most likely looking for resistant test up here as we sort of get sort of down the bottom side here the same as well. But nothing major I don't foresee coming with copper here till we get a close outside this box. Finally, let's finish off, have a look, actually have a quick little look over silver. So silver is attempting this breakout, but it's very much lagging. You know, you can see that it's very much sort of like behind gold. Gold's obviously back at all-time highs, like silver's not about to test all-time highs, but it should be up around this sort of 34. It's only down at 30, so it's got lots of catch up to do. So potentially if we do see a big breakout on gold, we may see a bit of a flurry into all metals, sort of at least for these silver. Silver plays both sides. Silver plays for precious metal side, and also it also plays just sort of more of a manufacturing kind of side, utility side as well. So if we can see a little break above this level, still maintains the same. We looked like we were coming here. Obviously, this is a nice little sort of breakout box zone that we got going on here. We can see definitely clear define where the sellers are. If we can get above this zone, this is again what we're looking for. Maybe a little push to sort of 31.50, but mainly be targeting 32. 31.30, targeting 32. This kind of move through here, but this is the defined level you want to see it break through. I think sort of if we get a break on gold, that'll sort of give us that move up through there. If you have a quick look on gold-silver ratio, moved right back up here. I thought we were getting a bit of a triangle, so we can delete these because this obviously hasn't played out. This is actually a break of this little falling resistance here. So very much back retesting the highs over here. You want to see this sort of get back down underneath this level here, at least to start. Silver moving. through this zone here, should we break back down under this level. Again, there's a lot of layers of support through here. So realistically, you're not going to get anything major till silver's back down, until gold silver ratio is back down under 87. Under 87, then we could look for silver to really pick up some steam. But while it's elevated like this, gold is the play. And finally, just finish off with China, as we can see, moving down very close to the price target here. We're a couple of points. What are we looking at here? Bang. 0.06% of move towards that price target there. So buyers coming in a little bit earlier than I had sort of anticipated here. Just have a look back. Look, I mean, it's a pretty choppy sort of range through here. So close enough, good enough in this sort of instance. But this is what we are looking for, this sort of play out through here. I guess you could technically move this up here a little bit and say that this would be the measured move play out of this bear flag that we had sort of planned out from last week. This is the level, though, you want to see what happens. I'd say that, look, this is, again, once we do hit this price target, I still think this is going to happen. I think we're going to see a little bit of a reaction from the market, maybe just a little bit of a chop through here, maybe a grind back up. You have to wait to sort of see what happens. But the more important part of this level is the break. If you get a sustained break and hold under this level, well, then we're really looking back down at a test to this main trend down here, which is, you can see, is quite a significant drop off, particularly for the one, because it is a little bit of a slower mover day to day. Occasionally you get these rocket moves, but generally it's a slow burn, slow grind kind of thing. But certainly it's a defined resistance level up over here. Stronger, I mean, less talk of tariff with China. We're going to see the yuan continue to strengthen a little bit, break this level down here. And we're probably going to see Aussie pick up a little bit more as well, because obviously China being such a big sort of trade partner with Aussie, we need them to be sort of kicking goals to be able to buy our stuff. Because although we're large in sort of land mass and all this kind of stuff, but really we're just a little kid on the block kind of thing that just happens to have a big land sort of country. I mean, we got what, 28 million or something here, which I'm sure is smaller than some of China's cities. So, which is quite crazy. But anyway, point being is this is the zone, the price target that we're sort of targeting, very close to it now. Couldn't pretty much almost call it, because it is within such a close mark there. But I wouldn't be surprised if we do get a little bit of a continuation down through here, which again could lead and could coincide with Aussie sort of pushing up a little bit higher. This measured move through here it kind of leaves it in no man's land, like a little bit of maybe a lower support down here, but not really anything super significant. But I'll leave it just on there just for now, because it is, as you can see, a bear flag that's playing out. And you got a little bear flag inside the bear flag, which probably would actually almost equal there as well. All right, look, that's pretty much it from me. I already covered the news. All right, that's it from me.